I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandOilGuy.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Today marks the anniversary of Black Friday last year, August 24th. Does it look like we're going to fall into the same pattern again?
The market definitely feels like it. You and I have talked about how the summer doldrums, the August, September, could end up being very ugly and catch a lot of people off guard. Volume is fairly light. Most people seem to be away on holidays or not paying much attention to the stock market, and we're just seeing it slowly grind higher and higher. With that said, we've had, in the last 2 weeks, we've seen the price action in the SP 500 show signs that there's some distribution going on. And if you go and you look at stats of who the net sellers are in the market over the last month and a half, it's institutional sellers. So the people driving this market higher are individual traders, and it makes sense because the market sentiment right now is extremely bullish with the average market participants. Everybody is excited about the stock market. They're buying. If you look at the long-term chart, at first glance, it looks very bullish, like we're starting a new major bull market to the upside. But if you look at the underlying technicals of the market is actually really weak. And in the last 2 weeks, we've seen the SP 500 particularly trading in a very narrow range. In fact, the last 30 days, we've seen the SP 500, the volatility be extremely low. It's the lowest it's been in about 2 decades, the past 30 days volatility. And we've only seen this tight range, really, a 0.5% range in the SP 500 in either direction. It's the lowest it's been since 1995. So the last month has been very, very tight price range. And what that means is there's a lot of energy. The market is coiling. It's building energy for either a big pop to the upside and rally or a very strong correction. And if you look at some other indicators like the ATR, the average true range, which is very similar to a measure of intraday volatility, we have the same readings that we saw back in November of 2014, which was or October there. That was a big drop in the market. And, so a lot of things are building up for this. I think, today's the anniversary of Black Friday. I don't think it's going to happen today. I think we would have seen it, but I feel as though we're very close to the end of summer, market washout just before, school starts and everybody gets back into work mode and trading. We could see something very ugly unfold here at pretty much any day.
You think it would have been a good summer for traders to keep their laptop handy on the beach?
It's been a really kind of dull past couple of months. Obviously, a super tight range. You don't really need to have your computer on you, but you definitely need to have alerts set up that when certain price ranges in the market are broken, you want to be identified. You want to be able to get to the computer because we're very close to some significant moves. The market hasn't moved really anywhere. A slow grind higher to multi or all-time highs depending on the index, but we're very close to a big move. So I think going forward, you definitely want to be alert and ready. I feel as though we're potentially a couple of days away from a very sharp market correction.
Precious metals have taken a little beating over the past week or so. Is that going to continue?
Yeah, precious metals, this is, I think actually precious metals is getting to a point today where we're seeing this flush out low. I've been talking about it to subscribers for a while, for the last couple of weeks or the last week, waiting for a drop to see gold kind of break down with a big red down day and for miners to flush out and see panic kind of a waterfall sell-off where every day the selling gets bigger and bigger until it hits a threshold. And today looks like one of those thresholds. Silver's had a sharp pullback. Gold miners are pulling right back to key support, the 20-day moving average. It's a waterfall sell-off, meaning it's panic. Everybody's just hitting the sell button, getting out of their miners. And same with gold. Everything is pulling back. Today looks like an extreme pivot low. There might be a washout a little bit more tomorrow, which means a little bit more to the downside for everybody who sees today's price action. They'll see it tonight when they get home, and they'll place their orders to close their gold and silver and mining positions. So we might see a little bit of a washout or gap down low tomorrow, but I have a feeling it's going to muscle up, and we're going to see a knee-jerk reaction to the upside. If you go, I had a subscriber send me an email about the Financial Times, and the Financial Times just came out with a very negative story on the front cover talking about gold loses its shine. And he pointed out a couple other major news stories on gold from the Financial Times in the past. One of them was November 19th, a very negative sign on gold, natural resources. And 2 days later, the sector exploded to the upside. And he sent me another one from October 2014, talking about gold, very bearish story on the cover. And of course, that same day, gold put in a major bottom and started a new rally. So, it's just the market sentiment is kind of capitulating. Everybody's panicking, freaking out from these pullbacks in precious metals. And even the media is now on board, and that to me is a sign that we are very close. I think today, tomorrow, we're going to see a very strong bounce, take hold or a bottom here in gold, and we could easily see them extend to new multi-year highs. And I think the stock market is very close to obviously correcting and falling, which money will flow out of stocks and into these metals, which both of them are kind of like the yin and yang. One goes up, one goes down during times of fear. So I think that's what we're about to see.
Has it been unusual for both the stock market and gold to go up at the same time?
They do at times. Like today is one of those kind of very rare days. We see every month or so, or every couple months, one of these days where everything sells off, where we're seeing stocks are down, bonds are down, precious metals are down. Everything is moving down. It's like everyone is just locking in profits, selling positions. They don't know what to do. And that usually kind of happens during either a significant top or bottom. I feel as though the stock market is nearing a significant top right here. I feel precious metals is nearing a significant low. When all these extreme levels are reached, this is usually when we see major rebounds and reversals. So I think we're going to see, the metals here rally, stock market hopefully continue to pull back. But what we've seen in the stock market, specifically the SP 500 the last 2 weeks here, is we've seen the SP 500 continue to slowly grind its way higher to all-time highs. And as the market gets up to these short-term resistance levels from, say, the previous day or the previous week's high, instead of the market trying to rally and push up through those levels, the market always has a way of finding the path of least resistance. So instead of the big money trying to muscle the market to make these nominal new highs to get the masses more bullish on the stock market, what they do is they can walk the price up in overnight trading, pre-market trading when volume is really thin. It's easy to move the market, and then the market gaps above resistance. So anybody who's short betting against the stock market is more or less going to be in fear and panic, and they're going to cover their short, which means they have to buy back their position. So that fuels a move up, a further move in price. And since you're above resistance, it gets even more people more bullish. And we see these kind of pops in the market. So the market gaps up, it runs higher. And these are the days when I think institutions are doing a lot of their selling. They get the market above resistance. All these people are buying back their shorts, and the institutions are slowly unloading their positions for the next couple of days. And we've seen this. It happened on August 15th. We had a big gap up. And then, of course, the market tanked for 2 days after that, selling off into an extreme pivot low, at which point we had a short-term reversal signal, and we saw a quick rebound. And it rebounded all the way up until yesterday, where we saw the market gap above resistance again. and everybody was covering the shorts. It hit a nominal all-time high again by just a couple little points on the SP 500, and now we've seen strong selling for the last session and a half. So these are signs that the market makers are trying to keep the market afloat. They're doing everything they can to keep popping it up to all-time highs while they sell into that new bullish sentiment that they're creating for the average investor. So there's a lot of interesting things at play here. We're near extreme highs for the stocks. I think we're at a pivot low for the precious metals, and I think we're about to have some pretty big fireworks take place in the next week or so.
We'll have more with Chris Vermeulen right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, oil has been hanging around the $50 mark, just under it for the past few weeks. Is it going to push past 50 again this year?
Yeah, crude oil, we've compared it a few times here back to the 2008, 2009 low in crude oil. And I think we're in a very similar type of situation. I think most of the downside, I think $50 is kind of a ceiling for the price of crude oil. It's gonna really struggle. It may work its way back up to the 60, but overall, I think it's going to be trading in this big range, which it has been, and we kind of identified a long time ago, more or less between the 50 and all the way back down to the potential lows of the 28. I think it could trade down there until the U.S. stock market really kind of goes in, finishes its bear market, which it has yet to start. I think we're very close, but I think we're going to see crude oil continue to trade in this range, more specifically between 40 and 60, and it's just going to continue to kind of flounder down here for a long time. And we're talking probably another year or so before it actually starts to, move up and start a new bull market back up to the, $85, $100 per barrel level.
Well, OPEC makes noises about freezing production at current levels. I remember last January, Russia and OPEC, said we will freeze at current levels. Of course, that current level was a record high. Any more talk like that?
To be honest, I'm not sure. I don't really follow what OPEC says. I don't find any of their stuff really helps with trading oil myself. But, when we look at energy stocks in general, to kind of change the subject a bit, energy stocks are kind of trading up at resistance. Crude oil is trading up at resistance, the $50 level. I think we're going to see a lot of what happened back in late 2008, early 2009, where energy stocks kind of just trade in this big range sideways, just like crude oil itself. And I think it's, there's going to be big percentage swings because it is, the XLE ETF for energy is trading, between 70 and 55. So there's a pretty big range it's going to be trading in, just like crude oil. But I don't really see it outperforming and really having any huge rally by any means. It's trading right at resistance. To me, the energy sector is more of a short play at the moment. And I feel as though there's other better ways to play the market, like an inverse ETF on the, say, the SP 500 or long precious metals at this point.
In the past few months, I've noticed oil companies buying up things like wind farms in Germany and the Netherlands. Is that how they're going to keep their stocks up?
Yeah, I'm not sure what the profit margins are on all that stuff. I'm sure it's half decent, but to me it makes great sense for them to be investing and getting into that stuff because the wind farms where I am here in Ontario, I can't believe how much they've exploded. You drive through these fields for hours and it's hundreds of them everywhere. Every field has got multiple windmills and, it's such a great source of energy that is clean. And, I think it just makes sense to diversify from, oil to have another source of energy. It just makes a much more balanced energy company in general. It'll definitely help them, I think, in the long run.
Should Alberta have diversified more faster to take itself out of a huge deficit? Apparently a $10 billion deficit this year for Alberta.
Yikes, yeah. I'm not sure. I don't know what they should do or what they've done, to be honest. I don't follow them, but yeah, I'm not sure.
It's been tough for them. Of course, when it comes to wind and solar, Alberta's perfect.
It is, I know. Talk about it. They got the perfect setup for it. And if they're not obviously doing it as much at all, really, they should be stepping in full speed. It's such a great spot. The Canadian, that whole area is amazing for wind, so they could definitely benefit from that.
And Alberta is the sunniest province as well.
Yep, it's great.
Taking a look at oil futures then, will they be going down or up heading into Christmas?
Right now, the charts are trading at resistance right now, which is around $50 per barrel. Price right now is at $46, $47. I think we might be able to see it squeeze up into the mid-50s. We might see it poke up into around the $56 per barrel area. But after that, I think it could easily consolidate and work its way back down to this 40 range. I think crude oil right now has had a very strong rally, and it's at resistance. If it can close above, it really needs to close around 49 a barrel. So 49.50 a barrel. If it can close above that, that'll be a multi-month new high close, and that will signal probably some buyers to step in. We could probably see it muscle its way up to the 55, 56 area. But at this point, we are kind of on a downswing on the cycle, so I wouldn't be surprised first if we see it come back down to the 44, 42.50 area before it tries take that next run up.
And getting back to gold for just a little bit, should people hold off buying gold right now, wait for it to dip a bit, and then head into the charge?
It really depends on the chart you're looking at. To me, gold still has some potential to pull back a little further. Silver seems to have washed out a lot more. It looks like it's more imminent of a bigger reversal to the upside, along with miners. So in my opinion, I like the idea of gold miners or silver as of today versus gold. I think you should own all three of them, but at this point, it's either miners or silver, I think, are going to have a much stronger percentage move, a reversal to the upside, than gold will at this point.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim.
My guest has been Chris Vermeulen. His website is thegoldandoilguy.com. You're listening to HowStreet.com radio. Our popular YouTube channel is Talk Digital Network. Find us on Twitter at TalkDigitalNet. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.